Hi, just providing a short Elliott Wave analysis update on Bitcoin on this Sunday. So the bullish scenario is a flat ABC, and the target area for your wave C is this blue box here. So sitting between the low of wave A at 107.2K and the 1.618 at 95.5K. The 2.618 would be a rare target for a wave C at 81K. Now, after a 5-wave structure to the downside in a wave C, we want price to move up, and for bulls, preferably in a motive wave structure. So either an impulse to the upside, 5 waves up, 3 waves down, you look for price to continue to the upside. A multi 1-2, which is also 5 up, 3 down, 5 up, 3 down, 5 up, 3 down, and eventually you basically move to the upside in a wave 3. So that should be a big push to the upside, similar, for example, to what we had over here, multi 1-2, and then you get your wave 3 to the upside. Or you want to see a leading diagonal. That would be the lowest probability structure, 5-wave diagonal to the upside, 3-wave correction, and then price moves up. You got to give price a little bit of time, but those are the structures to at least keep in mind, as then you're going to be looking for price to take out the all-time high. In a more bearish environment, you're looking for this 5-wave move to the downside and then a 3-wave corrective structure up. The moment you get a 3-wave move and a corrective structure to the upside, you have to be very aware of the bear market at least. Now, this can still be bullish. You can have the flat be a wave W, corrective move is X, and then a wave Y to the downside. That is going to be your bullish scenario if you get a corrective move up, so not one of those motive wave structures that I have shown on my chart just now. But if the move here is corrective, you have to be aware of a bear market where this is a 1-2 and you get a larger wave 3 to the downside for much lower prices. Still takes a little bit of time because we still need to get a bounce to the upside, and eventually we have to figure out what that bounce is. Now, if we then go to the 1-hour time frame, then on the 1-hour time frame, you can see the move here to the downside, and preferably I'm still looking actually for another low. I will go to the CME chart in a second as well and show you my count on the CME chart, which does not have this wick. But on most of the, at least, crypto exchange charts, we have these wicks, and preferably we do not count truncation. So in other words, preferably a wave 5, the circled 5 here, is ending below the circled wave 3. Truncations in general are rare occasions. So here on my chart at the moment, I have a double 1-2. So we have a 1-2-1-2. You get a 3, a 4, and then you look for a 5 to the downside. I see that my numbers, because of my morning routine update, were changed here. But basically, inside the circled 5 here, you're looking for another 1-2, 1-2, 3, 4, 5, range in a 4 and a 5. Finish, therefore, the higher wave 3. So 1, 2, 3, get another 4, and another 5. So you would expect 2 more drops in this particular case. Price action to slow down. It slowly curves horizontal. So you're going to create a little bit of a rounded bottom. It also creates a typical motive wave structure. Your 1-2s, your 3, and then you get your 4s and 5s. So you have overlap, sharp move, and overlap. Preferably here we see decreasing volume as price is creating a couple more lows. Now you can see the 0.618 on my chart here. This one is taken from this wave 2 to the current low on the chart. If price moves to the upside and touches 109.8K, I will remove, or at least I will change this count, as then this wave 4 would be invalidated here. We don't want wave 4s to touch the 0.618. Now, the moment price moves up, touches the 618, I will basically move everything to the left. So basically, I will end the circled wave 5 at this low over here, which means this wave 4 will change a little bit. And then you preferably would still look for this wave 4. So then this move to the upside would be part of this 4, and still look for another drop in a wave 5, ideally, at least according to the Coinbase chart. Main reason being that it is incredibly tricky to count this structure as a single 1-2. So a wave 1, wave 2, and a move to the downside. I explained this in more detail in my previous much longer video, but this counts much better as either a double or triple 1-2, which therefore means that on Coinbase you preferably still see at least another low when we at least look at the detail. This is like the detail, right? The nitty gritty of course, if we zoom out on a daily or 4-hour time frame, we preferably eventually look for price to get a bounce and move up. Because once you have your 1-2s and your 3 finished, you're looking at your wave 4s and 5s, couple more lows, but eventually you look for price to move towards the upside. That becomes more interesting. From a trading point of view, this is your entry for shorts. You ride the 3 down. This is your exit area for shorts. And also, this is then slowly going to become an entry area for longs to look for a bounce towards the upside. And then once you get a little bit of a bounce, you have to analyze the move to the upside, figure out higher probabilities, motive or corrective. I'll show that in a second. But I guess you get the idea. At the moment here, I have this on my chart, touch 109.8. I'm going to move some things around. And then the target area for your new wave 4 is going to be pulled from this wave 2 to then this low. And then you can see over here, the 618 moves all the way up to 116 with the common target area for this wave 4, if everything again moves to the right. So then you have 1, 2, 3, 4, and 5. Target area for your wave 4 here is this area, the blue fibs, 108.3K to 113.7K, which also includes some areas of resistance still. So we have 2 daily naked point of controls. Let me Control Z here for a second, move the fibs back. So here you can see we have 2 daily naked point of controls, 111.3, 113K, and price is currently hanging around the order block that I have here on my chart. So providing a little bit of resistance. It's interesting that price here moved down and then moved to the upside to the order block. It was something that I was looking for yesterday. I put it here on the chart as I was updating throughout the weekend here. So we have W, X, and Y, something I'm considering locally, but preferably I saw a move down first and then price moving up. Now we're of course at the 6-hour order block. Bullish scenario was a bunch of 1-2s here locally. But yeah, it's just lower probabilities. I said it in the group yesterday as well. It's for me lower probabilities. It doesn't really make too much sense. Also during the weekend, you expect more corrective or ranging structures than motive and start a wave 3. And also just because of time and the size of the wave 2s compared to one another and compared to the wave 1s, just doesn't really match up nicely. So locally, the move to the upside for me would have a higher probability of being a corrective structure. And then now with the new updated price action, of course, we're at a little bit of resistance. But as I say here as well, move up is higher probability corrective. And if we do get a larger WXY, then this is, of course, how I would put it on my chart then. So we have ABC and W, X, ABC and Y. Currently at the order block, if you do pass the order block, I would expect price to move at least to like preferably like the previous range. I mean, we'll see if price gets that far. But at least my next level on the chart is the daily naked point of control. If I open all of my folders here, you can see this is a little bit of a gap. Sure, if I pull a volume profile here of this whole ranging structure, you can see a value area low at 110.3. So sure, interesting. But you can also see the point of control aligned with the daily naked point of control. So that would be like a main area that I would like to see visited actually. And that is where, for sure, my interest might be triggered. Preferably, what I would like to see is price then move towards the upside. C should be an impulse. So you have 3, 3, and then you get a 3 to the upside. And this second leg would be an impulse, being a 5-wave structure most commonly. So preferably, what I would like to see is a bunch of 1-2s, get to 3, bunch of 4-5s, slowing down. Typical trend and turn method again, the Kuhn's trend and turn method. Kuhn's waves, Elliott Wave simplified. Thanks for all of your comments. I had a couple of options. I should do a voting soon. But basically, you get your 1-2s, you get your 3, you get your 4-5s again. It's the same, but the other way around compared to the higher time frame, 4-hour time frame structure where we have an impulse down. Volume declining as you make a couple of highs, eventually end up in an area of resistance. That's interesting. You look for price to turn around. Trend and turn methodology in a nutshell. So same is true on the 4-hour time frame where of course price move down on high volume, you start ranging here, price comes down in an area of support, and that's interesting. Every area to the downside, every important area to the downside, monthly naked point of control here at 105 is touched. The daily naked point of control is new and fresh, by the way, but let me hide this one, not lock it. Let me just hide this one here. So the monthly naked point of control is touched. Important area, I've been talking about this level for a while, of course, especially with regards to the weekly time frame. and it is touched. So naturally, when looking for 4-5s, these are areas where one can consider going long. And then as price is moving to the upside, one can see, hey, is this high probability corrective or motive, which helps with managing positions, taking TPs at areas of resistance or not yet, and etc. Right? That depends on personal plans. But to the downside, we still have some support, as you can see as well over here. So that can easily be tapped. And then at 96K, we have still a high time frame point of control as well. Now, I just showed you the double 1-2 in the beginning. We can add another 1-2 to make it a triple 1-2. A triple 1-2 basically means adding another 4-5. That's the main difference. So the main difference is adding another 4-5 or not. I mean, in the end, you're going to be looking, once you have 4-5s, you're going to be looking for a bit of a bounce to the upside. If price can move up here, move beyond the order block and go up to the daily naked point of control, touch the 618, then I'll just again show it on my chart here, but maybe now a little bit more clear. We're going to finish this one here. Over here, that's going to be 5, which is then ending 3. This wave 4 is going to go up the target area. And then you're still looking for a 5 to the downside. So you have your 1-2, 1-2, 3, 4, 5, 4, 5, preferably, of course, decreasing volume on this particular chart. Now, if we then go to the Coinbase chart, let me quickly Control Z here so I don't lose everything. There we go. So if we then go to the CME chart, you'll see things are a little bit different. Now, CME is not moving during the weekend, of course, so you don't see price action developing here. But you can see at least that here we could have a finished structure. If we count this as a double 1-2, we could finish something here at the low. As mentioned though, preferably you then have a motive wave structure to the upside. So a multi 1-2, an impulse, or a diagonal. But at the moment with the local price action that we have and had over here, this looks seemingly like corrective. Probabilities would be higher for it to be corrective at the moment. So I'm just observing this, and you know, as we get new information also during the weekend, I do keep an eye on what is happening on the chart because it's important for management. So we have our triple 1-2 here on the CME. As I write here, double 1-2 would finish here, triple 1-2 gets one more low. And the main difference is not having this wick. So we can actually finish an impulse here with decent probabilities on the CME. I also, by the way, I've seen some chatting about Bitstamp. Just quickly talking about this. On the Bitstamp chart, you still have higher low, higher low. So you would still need to count a truncation here, which of course is not preferred. Now, maybe it has moved to the downside, of course, like very high volatility, big wicks, and you know, sure, the probabilities maybe for a truncation increase during moments like these, but preferably one avoids counting truncations till there's no other option anymore, and that is basically what I'm doing. So here we then have, again, multi 1-2. We can actually finish a 4-5 over here. On other charts, there would be a wick here, and then you have a truncation. On CME, we don't have that long wick, so therefore we could finish wave 5, therefore wave 3 of a lower degree. And then you have 4, move down, that's a 5, get another 4 and another 5 for a triple, or finish a double at the low. Again, what you preferably like to see is volume decreasing as price is moving to the downside. You can see here volume is decreasing, couple more lows, volume moving down. That's what you like to see. It's perfectly fine to get another wave 4 and 5, another low, preferably on lower volume. And at some point we look for price to turn around. Preferably it touches one of those areas of support I spoke about on the Coinbase chart, like the value area high or the high time frame range point of control at 96, or a daily naked point of control around 101. Like there's different levels. Got to observe how price goes there, as a wave 5 to the downside should be a motive wave. Preferably it's an impulsive structure, 1, 2, 3, 4, 5. So you can use trend and turn again on the lower time frame. Couple 1-2s, 3, couple 4-5s, and then eventually look for price to turn around and get that bounce to the upside. But at the moment, we already have a bounce towards the upside. So we just look at that structure, look how it's developing. But at the moment, I'm more on the corrective side with this move up than the motive side. And because I am looking also for it to be a bit corrective from a probability standpoint, it's interesting to observe the resistance area. So now at the daily naked point of, or the order block. Next up is the daily naked point of control. Possibly the range value area low is something to keep in mind. But if this higher probability corrective, you basically look for another low. So at the moment, based on the info, I guess we can agree as Elliott Wave analysts that this move to the upside at the moment has a higher probability of being a corrective structure by the looks of it. So looking for another low, price making another low would definitely not be surprising on a 1 hour time frame, while on the 4 hour we have reached at least the target area of C. As you can see, there's a lot of space still, but at least we have touched the blue box. And after your 1-2s, you do eventually look for price to create a bit of a bounce and preferably move to at least the 0.382 Fibonacci that you take from the high to then the low. So the 0.382 is generally a minimum retracement target. Once a move is finished, you expect at least the 0.382 to be touched. Now, it does kind of like overlap with the potential wave 4 target. If price is going to push up here, you will see like there's quite a lot of overlap here. So we'll have to figure out if a move down is finished or if we're still in a 4 or not. But that stuff we'll figure out later, right? I mean, that's just step by step. For now, I just wanted to observe the reaction here at support. I think in the previous video, I mentioned we had bullish CVDs at support as well, which is nice. That's something you like to see. So this is the large range. Here, price touched the monthly naked point of control, moved up, came back down with bullish CVDs. That is perfect. That's something you like to see. Definitely worth a consideration from a trading plan point of view. And then look for price to at least take out this high, which is a minimum target, and then see what comes. Generally during the weekend, sideways ranging. As mentioned, Saturday tends to be more sideways than the Sunday. So this was your Saturday. Beautiful price action. And today we can see a little bit more movement. So very nice, right? So especially when looking at the monthly naked point of control, looking for 4-5s, area of support, seeing bullish CVDs. Now it's just management. Is it a finished move? Is it not a finished move? We'll see. But this currently does seem more corrective. Then we have some news. So next week, Thursday here, we have some news. Now, I never really know what the news is, as I really do not follow news at all. I don't have to know what it is and all of that stuff. The only thing I want to know is what time, what day. I do realize from experience that this generally doesn't do anything. And from experience, this generally does give some volatility. So Friday should be more interesting than Thursday. The times here, Central European time zone. And then we get to the summary, I suppose, so the probabilities. At the moment, as it stands on a weekly time frame, not covered in the video, but bullish on the second position, bearish. Bearish needs a 5 down and a 3 up confirmed. The moment you get a 3-wave move to the upside, we're gonna very much observe the next retracement, because if you get a corrective move up, the bulls are looking for a sideways WXY, WX, and then a wave Y to the downside. Bears are looking for the end of a bull market and further continuation. So that's going to be interesting. But at the moment, as it stands, we only have a 5 down here at the moment, not a 3-wave move up confirmed. So it's too early to give the bears the highest probabilities from an Elliott Wave point of view. On the 4-hour time frame, we are eyeing a move towards the upside, 1-2s, the 3, 4 to 4-5s. We have our areas of support. All of these are potential considerations for a potential long, depending on how price goes there, plus potential reactions, of course, like bullish CVDs. I love using CVD. And then aim for a move back towards the upside. Minimum retracement is generally the 0.382 that you then take from the high to wherever the eventual final low is going to be made. And on the 1 hour, the move towards the upside here does look better as a corrective structure compared to it being a motive wave structure. So at the moment, definitely considering a WXY to the upside, possibly reaching the daily naked point of control. Interesting. But a WXY is still a bearish structure, and after a WXY, one would think the low is going to be taken at a later stage. So just following it as it stands. I mean, initially I was looking for price at least move up to touch the daily naked or the 6-hour order block. So this is what I was looking for yesterday. Get a move down, grab some liquidity, then move up to at least a 6-hour order block. And then today, as price then touches the order block, your bearish scenario is that's finished. Your bullish scenario is getting a bigger WXY. This was quite a steep move, so seeing another leg towards the upside would not be surprising. So, and we are currently working on that second leg towards the upside. So yeah, this is just sharing my thoughts here on the Sunday, a little bit what I'm looking for and how I'm thinking with the current price action and some of the biases that I have on different time frames. And hopefully that is useful to you. So yeah, that being said, enjoy your Sunday. Thanks for watching. I hope this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.